there we are. All right. It's good to see you guys all lined up, ready to go and play with the software, set up some settings for our Paul Golden automated strategy. For those of you who are with us last week, we had a guest speaker, Paul Golden, who was a President's Club student of mine, and he's doing quite well. He's probably one of the top performers this year in my President's Club. And so he came in as a guest speaker last Wednesday and told us how he was doing his trading. And primarily what he's doing is he's doing the scalp and trail strategy. Right now, he's incorporated a few things from David Duty because he is in David Duty's class as well. And for those of you who are not familiar, David Duty is one of our mentors over at Trade Mentors, part of our organization, and he teaches a class. I teach classes. I teach my classes online. They're free. He teaches a paid class. So if you want to go and work with him, you can get into his paid class. It's just at davidduty.com, and his name spelled just exactly the way you would expect it to be spelled, D-A-V-I-D, duty, D-U-T-Y.com. And you can sign up for his online course over there, and you can join his class at any point. All right, so that is, and I think they trade every morning for the opening bell. So that's a lot of fun to go join David Duty if you want to do that. All right, so now what we're going to do is we're going to take the ideas and the concepts that Paul Golden talked about last Wednesday, and we're going to automate them. All right, because you know me, I like to automate things. I like to make it so that it's easier to set up and put those in there. Now, Paul doesn't do a whole lot different from what I do. The difference is that he uses one of David Duty's little strategies, and I'm going to come over here. They use the range bar 50. Now, let's go ahead and start with the range bar 50 because that's what he was doing, but we're going to change it up a little. All right, you got to practice. All right, this isn't going to be a one shot. Oh, Land's got the this is going to make me rich beyond my wildest dreams. No, there's different variations to it, and range bar 6 goes really slow, so you may get 1 or 2 trades in an hour, and we've only got an hour, so we're going to go down to some shorter term time frames so we can get more trades. Just to example it, learn it, practice it. All right, and then you can go back out to the 50 to kind of slow things down when you're maybe with real money. But I want you to practice the different time frames, find out which one works best for you. Those guys over there use the range bar 50. So let's start with the range bar 50. We'll program everything up for the range bar 50, and then we'll probably drop down to a shorter term time frame just to see if we can get more trades to practice with. All right, so how does that sound? All right, let's come by and say hello to a few people. We got John over here. It's nice to see you, John. Putting up your little marquee. We got a whole lot more people saying watching than who have their names in the system. So if you guys want to put your names up here, I'll make you famous. There's Albert. It's nice to see you, Albert. Kurt. It's nice to see you, Kurt. And Chad, of course. Nice to see you, Chad. So it's good to see you guys. And again, like I say, we got a lot more people watching than would have put your names up there. If you want to say hello to everybody, I will flash you on the screen. All right, here we go. So there's the NASDAQ, and this is the range bar 50. And the range bar 50 looks good, doesn't it? I mean, it's making nice trends. It's moving. It's shaking. Now, if you remember, this is just a strictly Paul is a strictly. He says that he does some scalp and trail, which is what we've done in this class quite a bit. But he does primarily just the scalp. So that's why out there on the little marquee on the little thumbnail I put scalp and scalp. Okay, we're gonna automate the scalp and scalp strategy. Now, some of you have been in my class for a little while. You know how to do this. We're going to go through and we're going to do it on the range bar 50 though. And Paul, he likes to use ATR and he likes to use 1 and 1. And I always say that 1 and 1 is a great starting point. That's where we like to start. But we can shrink it down if we want to be a little bit more aggressive. You'll notice it gets a lot fewer arrows. But in this case, this could be one of those situations where you're like, just trade the arrows, Land. Just trade the arrows. Okay, well, we can do that. You can do that. And good strategy. 1 to 1, average true range, ATRs, that's all it is. Just an average true range. Okay. No trailing stop, you just trade the arrows in and out. But remember, and I want to touch on this, you have what we call the profit box versus the trend box. all right? The profit box is how much money you can make in a trend. The trend box is how big the trend is. And those two things are different. And so when you look at a chart like this, you're like, oh, wow, I could be rich, rich, rich beyond my wildest dreams. Look at how easy this is to trade. But remember, you got a profit box. The profit box is from where you can get in. And in this case, we're using the range bar, the little yellow arrows. So from the little yellow arrows where you can get in to where you can get out, which would be the little yellow arrows on the arrow right there, see? That would be your profit box. Now, the trend box is from the bottom of the trend to the top of the trend. Now, we as humans, we like to look at this and we like to look at the trend box. We have we want to see best case scenario. Well, it's really hard to capture anything outside of the profit box. So this whole section here, which in this example would be $510, and this one example here, now we're not going to get out here because didn't get an arrow. So also I'm going to draw this. So this is $600. So you don't get to count those outside $1,000. That doesn't count. You don't get that because it's really super hard to capture that. All right. And you say, well, I'm going to capture it with limit orders and take profits. Okay. Well, you might be capturing what you think is a limit order way down in here, and then you're going to miss the big run. So I'm not going to play that game with you. Capturing that outside trend box is really hard. All right. Oftentimes you'll hear traders say that this is the hors d'oeuvres. All right. And this right here, this is the dessert. And then this right here, this is the meat and potatoes. So when you come to eat at the stock market table, we don't generally get the hors d'oeuvres, don't get those, and we don't get the dessert. We're here for the meat and potatoes. That's all we can get. It's just kind of the profit box. All right. So we're here for the meat and potatoes. Sorry, no dessert, no hors d'oeuvres for you. Okay. You're just the hired help. So we're going to come in here and let's clear some of this up. And I want you to keep that in mind, because when you start looking at some of these trends, you'll think, well, I could have made a little bit of money in here, when in reality, the profit box tells you that you couldn't have made that money. All right. You couldn't have made that money. There's the profit box. Look how tiny that little profit box was. What about this one? Here's a profit box from entry. Well, that would have just been a loss. There's your loss on that one. Profit box to profit box. Now, this is from yellow dot to yellow dot. Now, if you're going off of arrows, you don't even get that. All right. Sometimes you'll get better than the dot. Sometimes you'll get worse. Let's just assume you're going to get worse. All right. So when an arrow comes up, remember, an arrow comes up at the end of the bar it's pointing at. That's really important to understand, because you don't get the arrow until the bar that the arrow is pointing at is over. So you can't get in on that arrow. You get in on the next arrow, the opening of the next arrow. Now I got Heiken and Ashi bars turned on, so we're going to turn those off. And you're going to see, it's kind of really messes things up when you turn that off for our example. Not that you can't do that. You certainly can, but look at how many more arrows you're going to get. Now, Paul says he likes that. That's kind of for his strategy. This is good for him. He likes all these arrows because he gets lots of trades. And since Paul is only taking 5 ticks, the market only has to move 5 ticks, and he gets his money, right? Because he doesn't generally do. He said he does, but most of the spreadsheets I've seen where he's showing his profits and losses, he's just doing scalp and scalp. He's not doing a lot of trending. He's not catching a lot of trends. All right, so he's not doing the scalp and trail. All right, so just be mindful that you can't get the full profit box. Okay, you get the break where the box goes, but remember, you don't really even get that. You don't get the yellow dots unless you're on the yellow dots. And if you're trailing the yellow dots, which is what we're going to actually do, because if you wait for the arrows, then that's even a different entry, right? But you have to remember that the arrow comes in at the end of the bar. So you're going to get the open of the next bar. Now, in this case, that was a little bit better entry. So you get here, and then up here, it's worse. It's down here. You're going to get the open of that bar, which is probably right there. So you can see the profit box is a little bit different, and it's obviously very much different than the overall trend box. The trend box is way up here for this arrow to this arrow, and that's this situation. What about all these? Like all these, all right? So keep that in mind, all right? So that's why the scalp and scalp strategy is important, and why it works a little bit better than trend trading. Because how often do these trends come in like this versus how many times you get these type of choppy situations? You get a lot of chop, and then you get a little trend. And we, as again, our human eyes look at this chart and think, oh, I could be rich beyond my wildest dreams because I would just catch this trend. Well, what makes you think you're going to catch that trend? What would have happened through this time frame here? You'd have got chopped to death, right? Now, with this strategy, this might be a very profitable situation, but you're not going to catch this big trend. You're going to do one or the other. You're going to either trend trade or you're going to do this trade. That's why I like to do scalp and trail, in an attempt to remember that if you're going to do scalp and trail, you're really looking for the trail, because the trail is where you're going to make your money. The scalp is just going to help you cover expenses like commissions and fees. And then the trail is where you're going to make your money. So scalp and trail is only going to make money if you can catch the big long trail. All right. If you're going to do scalp and scalp, then that's a different story. All right. You're just going to be happy with scalp and scalp. So let's go set that up. All right. So Paul likes to do 50. We're going to come in here. We're going to go over to the track and trade trading tab. And I've got them all set up in here. Should I just pull up the settings I've already got, or should I show you how to do the whole thing? In the interest of time, I'm just going to pull up the settings I've already got. All right. Because I've been practicing this for this class. So I actually prepared. All right, I'm prepared. All right, we're going to come in here, and I've got this set up. The first thing I got is scalp on the top side, that scalp on the bottom side. And these are set up as market orders. The one I want to do to automate what Paul was doing last Wednesday was the stop and possibly the limit. Now, Paul doesn't do the limit. He and I have worked on the limit quite a bit, but I don't think he and David Duty and those guys, I don't think they use the limit so much. But I want to show you the limit, all right? Because there's a time and a place for that as well. So let's come in. This is the one that is the automation. Oh, I got so many in there. I have to kind of scalp ATR. Let's see where it's at. Scalp ATR stop. Is this one here? Okay, so take your little cameras. Okay, everybody got a little one of these little devices. Take it, turn on the little camera thing, and go take pictures of the screen. All right, there's your settings. You want to have those settings so that you don't lose them. And this is what we're going to do. Now, this first is just the name. That hasn't got anything to do with anything other than just to remind you what it is. All right. You can make that say whatever you want. For me, it says it's the scalper. We're going to scalp and we're going to trail the ATR with a stop for entry. That's what that means. We're going to trail the stop for entry. And then we're going to stop with a 25, and we're going to have a limit of 5. All right, stop at 25, limit of 5. Now we can tighten that up if we want. We can loosen it. Paul puts his at 50. To me, I felt like that was a little bit far back. He says, well, I don't ever let it go to 50. I push it up closer as soon as I get it. I'm like, well, why not put it closer in the first place? All right. Then we're going to automate. So this is how we're going to automate. So we're going to trail ATR stop, right? So we're going to trail for entry, not for exit. We're going to trail for entry with an open stop order. Now, that kind of confuses some people because they think stop orders are to get you out of the market, right? No, you can get into a market with a stop order as well. And this track and trade allows you to trail with an open stop for entry, which is really cool. I call it an intercept order, all right? So it intercepts the market for entry. And then what we're going to do is once we're into the market, we're going to have a jump stop. If the market moves one tick, even just one tick, now, because notice that our limit order for taking profit is only 5 ticks, right? Remember, Paul was doing just 5 ticks. So we're going to come in here and we're going to say, if the market jumps 1 tick, which is all it has to do is just basically move 1 tick in our favor, we're going to move our stop from 25 to -10. So if it moves in our favor, if it clicks us, gets us in, moves 1 tick, which is only 4 away from our profit, we're going to jump that stop to -10. Not too close. We don't want to get it so close that we're within their purview of the market maker's purview of coming in and gunning for our stop. We don't want them to gun our stop. So we want our limit to be closer than the stop. And we're going to do that by double. So that if they look at it, if their computer system, of course, it's not a guy with a computer hitting a little mouse, it's a computer system. And if it looks at this and it says, okay, I've got an order up there at 5, and I got an order down here at 10, and actually the 5 is only 4 away because I ticked 1 up. I only have to go 4 ticks to fill that one, and then I can go back down and fill the 10. So he's going to take, his computer system is going to say, I would rather take the 5 because it's easier to get. It's within my purview. 10's outside my purview. So I'm going to go take the 5 first. 10 is not going to pull him back down. All right. So that's why we do that. But if it does get pulled back down, because we're not the only traders, believe it or not. Okay. If other traders pull that market down, then we're not going to lose 25 ticks. We'll only lose 10 ticks. Does that make sense? It's just my logic. It's, think about it. And then we're going to trail after the jump. So if the market goes 1, we're going to, for every tick it goes, now it's only going to go 5. It's all it can go, and can only go 4 more because we're going to go jump by 1. It's going to trail up 4 ticks. So if it goes all the way up to, let's say, 4 ticks up, which is 1 away from where we'd make our profit and turn around and fall back down, well, we've already clicked back up another 4 ticks as well. So we'll be down to where we can only lose, like 6 ticks. All right. So we're not going to risk that full 25 ticks like Paul does. We're going to be a little bit more aggressive, and you want to practice with it and see if you're happy with it. But this is kind of my logic and the way I'm thinking about it, right? So this is the automated system. Paul does this all manually. All right. So we're going to come in and we're going to say okay on that. Now, we're going to come in, and the way we do this, now, Paul, he'll sit here and wait, right? He and David Duty have this little box. So they come in here and they, I got a little box in here, and I'm going to come in with my little box, and I'm going to make this little box. I got to measure the box. My box is going to be 50 ticks, so they're going to make a little box. It's 50 ticks, all right? So 50 ticks. If I can get it, we're going to have to, do one of those things. So we can make this little box 50 ticks, all right? So we're going to go to exactly 50 ticks. Now, 50 ticks, because they're on a range bar 50, it's going to be 1 range bar, all right? So now they don't have to sit there and use their dollar calculator. That's what they're doing, is they're making a little box so they don't have to use their dollar calculator. Now, each one of these boxes is going to measure the distance of a tick. Now, what they're going to do is reason they do this is because they want to measure how big that tick's going to be. So that tick right there is there. And to get a new price bar, their theory is that it's going to have to be here, and the dot is going to have to be below it or above it. All right. So that's the idea. They want it to be below or above it. They don't want it to cross over. Like this is too close for them. So those dots are too close right there. They wouldn't do that. All right. So they're going to sit there and they're going to measure every little box. Now, the problem with this is that the tick it's not going to, it doesn't have to adhere to where the current high is. It can go higher. It can go up here, or it can go down here. It can go 50 ticks either direction. So what these guys are going to have to do is they're going to have to constantly be moving their little box, all right, to measure where that tick is. But if they're going to use this entry point like this, they're going to have to put it, say something like that. The little box thing, always kind of made me like, what? The little box things always kind of confused me. So I'm going to kind of not use it. Boom. All right. We're not going to use the little box. Okay. What we're going to do is we're going to come in here and we're going to drop our stop. This is a trailing stop on the yellow dot. All we're going to say is if we get a yellow dot crossover, we're going to get in and we want the market to go 5 ticks. So you just come in here, you drop it on there, boom, just like that. And now if the market breaks that yellow dot and goes 5 ticks, all it has to do is hit that. You get your 5 ticks. 5 ticks is $25. You take $5 off for commission. You make $20 each time you do this with a single quantity. That's it. So then you just sit here and wait. Now, we've only got 30 minutes because we're in power hour. And this is a 50 range bar tick. So that's a lot of movement. It's got to go before we're going to get our tick. So this is the way that Paul has backtested on the range bar 50, and he's had very significantly good luck using the range bar 50 with basically this strategy, other than the fact that he kind of fiddles around with David Duty's little box. The little box always escapes me. I don't know. I don't know about the little box. All right. So this is what you're going to do. You're going to sit here and you're going to wait for that to move. And that's really all there is to it. Because as soon as it crosses that yellow dot, you need it to go 4 more ticks or 5 ticks. 5 ticks give you your money, and you're happy-go-lucky, right? You made your 20 bucks. So how long are you going to wait for 20 bucks? Now, you can go increase it. You can say, well, I'm going to go up to 3 contracts, right? If you go up to 20, Paul got up to 20 at one point. The problem is 20. The problem you have is when you're going to say, I'm going to go 20 ticks or 20 contracts. Most of the time, you know, they're going to stop you at 14. Paul went and got permission to go beyond 14. So he was able to do 20, 25 ticks. The problem with that is that oftentimes what happens is the market will go up and it's not a 1-for-1. You don't get all 25 ticks. You'll get 6, and then you'll get 8, and then you'll get 4, and then you'll get 3, and then it fills some and it doesn't fill all your 20 ticks. And then your limit ends up being screwed up and your stop ends up being the wrong quantity, and it kind of can mess things up. Now, Track and Trade does its best to try and keep those numbers. If you get filled with 5, it tries to have a 5 stop. But sometimes if you go in with 20 and it only fills 5, well, you got a 20 stop. It tries to make the adjustments, but you're all on different tickets. It kind of can get screwed up and then it messes things up. So you just practice with it, be careful. And what happens in the demo account is usually the same as the pretty darn close to the real money account, believe it or not. I do both, and so I find that they both work pretty similar. They've done a good job with the demo. But oftentimes what will happen is you're more likely to get all of your contracts filled in the real and only half of your contracts filled in the demo. So the demo will show that, oh, I only got 3 of my 20 contracts filled. When in the reality, in the real money account, you'd have got all 20 filled, boom, just like that in the real money account. And they simulate that you only got 5 filled. So it screws things up. That's all I'm trying to say. Be careful, be mindful of that. So if you use smaller quantities, and that's why Paul has backed off a little bit, he uses 1Z, 2Z, 3Zs. Depending on how confident he is that the market's going to roll in the favor that he's looking. All right. And that's what I would recommend too, is stay with the smaller quantities, trade a little bit more often, smaller quantities, as opposed to, once or twice a day with 30, 25, 50 contracts. Because that one time that you have 30 contracts on, 20 contracts, or even 14 contracts on, and it doesn't go in your favor, boom, oh man, that's painful, especially if it's the first one of the day. Because you have to make so many times, right? Depending on what your stop is, how many times are you going to, and if you got 25, 30 stop, now we scooted ours up to only 10 and it'll jumps forward a little bit. So, 8, 7, 6, it's not as bad, try to keep a 2-to-1, 3-to-1 risk versus reward ratio. All right. So we could sit here for a very long time, probably the whole hour, and never get a trade. That's no fun. Okay. It might be more profitable over the long haul because you get more accuracy, right? But it's no fun. So we have to practice a little bit on a shorter term time frame. So we're going to exit out of this chart and we're going to come down to a range bar. Let's just go to a range bar 6. A range bar 6 is really aggressive, all right, because it's got a lot of opportunities to trade on your range bar 6. See all the arrows? Those are all, each one of those is going to be a trade. So we're going to just do it because we can. So we got to practice. So we're going to come in here. This is not real money. And we're going to I just missed my opportunity. So you got to wait for the dot to come over to the other side. There it is. Okay, now I can drop it in there. And you can see how far 5 ticks is. This from green to blue is 5 ticks. This is sitting here at 25 ticks. But the minute it goes 1 tick in our favor, that's going to jump up there. All right. So we'll blow this up, make it a little larger. And I got another little component piece to this that I want to talk about. Let's see what we got. Some guys come over here. Chad wants to know what VRVP is. What's VRVP? You're gonna have to tell me what that one is. Oh, there it goes. See, it ticked in our favor. Now we need it to keep going. 5 ticks in our favor, and it didn't even go 5 ticks. Oh, come on. We may have to move it's going to say, I'm doing that. Do you want to do it? Yeah, I'm going to do it. I don't want it to go too far. Uh-oh. There's a situation where, see that? Because it didn't fill all of how many? Oh, I had 14. There's land being stupid. Okay. I just told you don't do 14, and then I did 14. So we got stopped out with 14 contracts. Only 3 got filled in our favor, and then all the rest didn't, and we got stopped out on see, we lost $1,700. Why did I have 14 up? I didn't. I wanted 1. All right, let's try this again. Okay, We're going to try it again. Land's not paying attention. Mr. Land, I discovered you last week with Paul. Does your platform overlay other platforms? I am using a few different prop firms. Now I'm subject to using the platform X, Trade, Bait, and NT. No, I don't. Any of the strategies, John, that we do in here can be converted to anything other. You're going to have to do your little conversions. I can't. There, that one worked. There we go. I screwed up all the other ones because but we got our little $25 right there. All right, let's try it again. Put it in there and just trail up. Any of these strategies are going to have to be converted to any other platform that you might use. I'm not a real big fan, John, of these prop firms that will give you money to trade. That's a bunch of bullshit. They're not. I've never seen a single person ever make any money doing that. Not that you can't, and I know that there are people out there because they use them as examples. Whenever one guy does, they'll pop him up there and put his picture up there. See how much money this guy made. He's rich, rich, rich beyond his wildest dreams because he's our prop firm guy. I'm just not real fond of it. Mostly they're just trying to sell you stuff. They want you to. I had a guy come to me who spent $30,000 on education with one of these prop firms because he could never pass the little test, or he'd pass it and then fail, and pass it and then get kicked out, and then he'd pass. Oh, all you need to do is just have more education from us. And he spent $30,000 on education with these guys and never did make a dime. Then he came and joined my President's Club, and we worked together for a long time. I don't know where he's at now. I haven't talked to him in a long time, but that's my experience with these prop firms. Mostly they're just trying to sell you stuff and string you along with education and string you along with recurring monthly expenses and all this kind, just to keep you hooked. And then I've never seen anybody actually. They make it so hard, You can't trade that many times. You can only trade this many contracts. You got to trade this. You got so many rules. They put all these rules on you that makes it so you can't ever. The odds are so stacked against you. It's like going into a carnival game and the odds are so stacked against you already, and then they stack even more odds against you. I don't know. I'm just not real fond of them. I prefer to just have a normal account and just trade. Just figure it out on your own without all that pressure that they put on you. All right, so we're doing this little Paul scalping thing. We're just doing one contract. Okay, we got stopped out. So see that? When we were right, we made 25. When we were wrong, we only lost 10. Not counting all this screw up job that I did down here. Don't count that. Don't count that. We pretend we didn't do that. All right. So now we're trailing down, and I'm going to show you another little filter. Again, David uses the little square box filter. So I don't understand it quite. I'm sure that there's value there, because otherwise David wouldn't be doing it. I've just never been able to figure it out, really. All right. So now wait a second. We weren't even in. Why did we get stopped out? Oh, we must have got in. And it went all the way. Okay. Well. Okay. Now I want to show you the next step. I want to bring you in. John, I hope I didn't blow your flame out. I want you to love trading as much as I do and as much as everybody else does. And the little prop firms they got such a bad reputation in the industry. Everybody except for the prop firms themselves hate them. But I don't know. I don't know. I don't want to discourage you. I hope you can make millions over there with those guys. So I don't know. I'm not. I used to own a brokerage firm, and we just saw so many people lose so much money. Oh, it was just sad. And I don't own the brokerage firm anymore, so it makes no difference to me. I just hope you do well. That's all. I just hope you do well. So I'll just show you strategies, and you should be able to take a lot of these same concepts and program them into whatever platform you're using. It's just, this is my platform, so I can, a lot of guys say, well, show us this platform or that platform. I can't have every platform. I don't know all the platforms. I don't have all the platforms. I don't use all the platforms. I just use my platform, and so I teach you on this platform. And if you want this platform, I'll show you which platform I'm using. But you should be able to take these same concepts and, depending on the platform, be able to figure out a way to kind of. A lot of platforms require you to write computer code, and so if you want to automate something like this little thing right here, these little buttons in this platform are really super cool, right? Because you can program to do anything you want through this little wizard window. So you can figure out everything you want, make it do all kinds of really neat stuff. Most programs don't do that. They don't have these little wizards. They have you have to write code, like real code, like programming code, to make things do stuff. And most people don't know programming code. So it kind of restricts people. They're not it kind of puts up barriers so that they're not able to make automated systems with those platforms. Track and trade doesn't have that. And that's one of the downfalls, right? I mean, if you want to write code, well, track and trade doesn't have code. You can't write code in it because everything's set up for people who don't write code. If you write code, there's other other platforms you might want to use. But if you don't write code and you'd rather have little wizards to help you be able to do all of your, setups, then this is a great platform because it doesn't require you to know code. Okay, that's okay. So John says, I understand the game. I understand it. It's a gamification model. Yep. All right. As long as you understand that, then you can enter, not thinking that you're going to be richer beyond your wildest dreams because these guys are giving you free money. They're not giving you free money. They're setting you up to give them money. And that's, as long as you understand that going in, eyes wide open, then go for it and see if you can take their money. Again, it's going into a carnival game, and they're kind of trying to get you to come to their tent because they want you to play their carnival game. All right. So the dots that you're seeing, yes, those little yellow dots are the ATR. Now, this is a strategy that I don't trade this. I don't trade it like this. This is the way Paul trades, and of course he trades on the range bar 50, and he uses some of the filters. And if you want to see how Paul does this, he explained the whole thing last Wednesday. And I said, what we can do is this week, I said we could go in and show you how to automate it. Now, I'm showing you the automation tools. I'm not telling you that, you're going to be rich trading this strategy. This is the strategy that Paul uses. It's just taking 5 ticks out of the market. I would recommend you be a little bit more wise about when you put this in there, and not just to try to catch every single dot, right? So that takes me to my next level here. John says, it looks like you could trail the trend until the ATR flips. Yes, that's exactly what we're doing, John. So every time the ATR flips, we're trailing for the reversal. Okay, so with an open ATR, with an open stop. So the ATR reverses, and then all we're trying to do is capture 5 ticks out of the reversal. If we can't even get 5 ticks, market's not even moving in 5 ticks, but that's because we're on a range bar 6. But I wanted to get a lot of trades because we only have 20 minutes until the game's over, right? So that's exactly what we're doing. We're trailing on the ATR with an open trailing stop. And then when it reverses, which is when you get the arrow, we want it to go 5 ticks in our favor and click us out. Whether you do 1 contract, 2 contracts, 3 contracts, I don't recommend 14 because that was a perfect example down here where we tried to do 14 and it went the wrong way and you just got wiped out. I didn't do 14 on purpose. It was just because I was showing the example of how to put 14 on, and then I didn't take it back off. But the idea is that you're just trying to pick up $25 with each one. Now you're going to probably want to go out to something longer than range bar 6. I mean, range bar 6 is really tight, but I don't know. Range bar 6 also cuts losers short. See? And so, but I think you should be more strategic about trying to identify whether the market's in a trend or up or down trend. Now this here, the market's obviously in a downtrend, right? So we should probably be more wise about that and say, well, I'm not going to take any counter trends, the uptrends, but it only has to go 5 ticks. But still, you're in a downtrend. You're going to be more likely to make money in a downtrend. So only take the short position. So when the dots are below, right? When the dots are below, because the market's in a downtrend, that would be where you'd be more likely. Right now, the dots are above. So because we're in a downtrend, we wouldn't put it up there. Doesn't mean it wouldn't go up there and click it and go to 5 ticks. Certainly could. And you see, we've been doing pretty well here. But Right now we're in a downtrend, so we would want to wait for the dots to be on the bottom side. This is more likely we would get a bigger move to the downside than to the upside since we're in a downtrend. So let's see if it'll pop above the yellow dots. Okay, we're not getting it above. We need it to go to above and pop above. We could stick it in there and try to make it on the rally up, but I think we'd be better off trying to wait. Don't overtrade. That's the name of the game too. Be more a little sophisticated about it. Okay, so here's what I want to do. I'm feeling like we got time. Calm down, Lan. All right, calm down. Okay, I want to go over and I want to bring up for you. I'm going to go to pitnews.com/slides. And I got a new slide in here for you on our slide deck. And it's slide number, I think it was right around like slide 50 or something. So let's go see. And this is where we're using I'm going to go backwards just to make sure it's not right up in here. No, I think it's a little further than that. So let's go the other direction. Okay. Where did I put it? There it is right there. All right. So here's our scalp and trail ATR RSI scalp and trail. So I added the RSI in here. And I want you to take a look at the RSI. This is the overbought, oversold region. And this has a little bit of instructions on here. So you can go out to pitnews.com/slides, look at slide number 55. All right. And that's where I've written this whole thing out for us. All right. So what we're going to do is I'm going to go back in and I'm going to go to the software and I'm going to turn on the RSI, which we have. See the RSI? Now, this is a range bar 6. So the RSI is a little bit funny. But once it gets above the 70 mark up in this region up here, we're only going to look for short positions. And when it's down in this region here, we're only going to look for long positions. All right. Now, you have to remember that when the RSI breaks below the 30%, that's oftentimes considered a sell signal. It's when it comes back into the channel that it's considered the buy signal. All right. Considered overbought and the market's going to rally. And that's generally the thinking of the RSI. Remember, it's just a moving average. The RSI is just a moving average, but it's put in on a scale of 0 to 100 scale. So it moves between a 0 to 100 scale. We put the 30 and the 70 in there as markers, and anything above 70 is considered overbought, and we would expect the market to come back down. Anything in the below 30, we would expect it to come back up. Again, it's based on a 0 to 100 scale, but it's just a moving average stuck in that scale. It's kind of a neat indicator. It's not perfect. A lot of people like it. It's very similar to a lot of other indicators, such as stochastics. You can use stochastics, the same thing. If we come in here with stochastics, right there, you see stochastics, basically the same thing, same concept, uses a little bit different, but it's still based on a 0 to 100 scale. It uses 2 lines instead of 1, and it's spread out a little bit more, so it uses the thresholds of 20 and 80 instead of 30 and 70. It's just slight differences. All right. Most indicators, that's really all they are, just real slight differences, and they basically are all the same. So it almost doesn't matter which indicator you use because they're all basically the same. All right. It's going to give you a little bit movement here, a little bit movement there. It's not that. There's no magic indicator out there. Use the one that you feel more comfortable with. I usually use stochastics over RSI because it's got a little bit broader width to it. It's just a little bit easier to read. All right. So here we are, we're in the neutral zone right now. So if it's in the neutral zone, if we start filtering, we say, okay, anytime the RSI is in here, we're not going to take a trade. We're going to wait until we get into what we consider to be an extreme. All right, an extreme. Now, I've also got turned on here the Bollinger Bands. Now, the Bollinger Bands, for those of you who are familiar with the 1 standard deviation, we talk about it all the time, the delta cone of probability. This is your 1 delta cone of probability, right? Your standard deviation. So a market has a tendency almost 70% of the time, once it reaches down into 1 standard deviation, it wants to go back to the center. Or once it gets up to the top standard deviation, it wants to pull back to the center. That's what this is measuring. That's all RSI is. Okay, this is your standard deviation. So as it breaks above the standard deviation up in here, it's saying, well, the likelihood is 70% it's going to come back down. Or if it breaks down and out of the standard deviation, the likelihood is it's going to return to the center or into the standard deviation again. That's all we're measuring with all these indicators is the delta cone of probability, or the one standard deviation. So is the market going to leave the standard deviation and then come back, or is it going to go down out of the standard deviation and then come back? That's all we're doing. Don't try and make it more difficult than it really is. That's all these indicators are doing, is measuring the standard deviation. So we've got this one up here, and I've got the Bollinger Band set to quite a long standard deviation, to a period of 100. With a deviation of 200. So I do that to try and get a longer standard deviation going across the screen. That's all I'm doing there. I don't want it just quite, the normal Bollinger Band has it a lot tighter. So I loosen it out just so I can see a one standard deviation. That's all we're looking at. This is just one standard deviation. You can see we're just kind of stuck in the trend right here. But that's because we're on a range bar 6. Let's go out to a range bar 18. So you're going to get, you're actually not going to get as many arrows, but you're still going to get basically the same concept. You're still in a downtrend, and you probably want to take just the short positions. And so if you'll notice, it should line up a little bit up in here. And nothing's coming out of the standard. Here we go. Here we got a little bit of a basically coming out of the standard deviation here, going back into it, but it really didn't come out very far. This whole market's just been sideways until right here. We got a little bit break, tiny, it's down here testing the bottom, but it's not really going back in. We're in an overall longer downtrend. So my point is, try and do a little bit. Don't just take every single arrow. All right. Don't just come in and take every single. Try and use some filters to try and help you decide the likelihood that the market's going to move more in one direction than it is the other. Now, I know it only has to move 5 ticks for this strategy. And 5 ticks isn't very far. And even on a counter trend, you can generally pick up 5 ticks. But you still want to put the odds in your favor a little bit better, in my opinion. Okay, now I want to show you something else, which is really cool. All right, so this is the stop version. You're just going to drop it in there, and you're just going to let it trail. As John was saying, you're trailing the ATR just for the quick little 5-tick scalps, right? And so we're going to come in here. We drop it in there again. It just has to cross the ATR and pop 5 ticks, and you get your $25. 5 of it's going to go to commissions and fees, and the next 20 is for you. So you can see, just doing this onesie, ignore the time I did 14 at a time. All right, we weren't paying attention, but we've done pretty good through here. All right, we had a 125. I don't know what I wasn't paying attention then either. I would not. You don't want to let it run a full 125, but we did. But you could. So we got, see, we cut it at 10 and we cut it at 40. But then we had 25, 25, 25, 25, 25, 25, 25. So if you get good at this, and you can kind of, you don't even have to be that great at it. You just have to be good at it. Just don't be bad at it. All right. So being good at it means, well, I'm pretty much stuck with I'm only taking one side of the market, depending on whether it's bullish or bearish. I'm pretty good at doing that. I'm not great at it, but I'm pretty good at it. You're still going to be, you're just trying to put the odds in your favor just a little bit more. That's why I'm saying use the RSI. That can help you. The RSI can help you put the odds in your favor a little bit, because if it's up here, you're say, well, I'm only going to take short positions if the RSI is way up here above the 70, coming back down into the 1 delta cone of probability. That's the only time I'm going to take a short position. You could say that. That's going to eliminate a lot of these, like even these orders here. On this range 18, we wouldn't have taken that one because it wasn't up there, right? Even this one. The market's just not moving very much. So we're not, the RSI isn't getting up even for these upper arrows. If the market was moving a little bit more, the RSI would swing a little bit more. So, it is what it is. I can't make the market move more than it does. I can, watch this. I can take the market, I can make it move. Watch me make the market move. That's how I can make the market move. That's the power and strength I have to move the market. All right, so here we go. Let's come in here. Let's exit out of this. Let's clear all this stuff off. I want to show you something else. All right. I think you understand what I'm talking about. You just need to practice this a little bit. And I'm going to show you another strategy. I'm going to show you something else really cool. Okay. So we're going to come in. This is the other side of this. You're like, well, Lan, it comes down and touches me all the time and feels and then goes the other way. All right. So what we're going to do. Yes, John, you can. You can make the RSI has arrows on it as well, and you could use those. So you come into RSI and you just turn on the arrows. So display, there you go. So there's your arrows on the RSI. But the RSI doesn't have a auto trailing stop on it. You'd have to use some other sort of means, or you'd have to use the manual means, which is right here. You can come in here and you can say, okay, I'm getting a pink arrow. I'm going to just boom, you can hit it like that, right? So you can use the market version. Let me give you those settings. All right. So that's what that one does. You can just say, well, I'm waiting for a pink arrow and I'm going to just hit the market order, because it's not going to trail a stop for entry on that one. You could do price bars back, and then, but you wouldn't know that it was going to get an arrow. You have to wait for the arrow, and then you just hit the market order. So let me show you those settings. So we're going to come in here. Let's see, what's the name? Scalp by market. So scalp by market right there. All right, get your little camera out. Take your picture. Now this one here, I put the stop back at 50, but it's going to immediately, if you do it with the ATR, it's going to immediately jump to the ATR, which is way closer than 50. It's just drop it at 50 and jump it to the ATR. So that's what that one does. So see, like this, if we say we think it's going to go up, we hit buy, it immediately jumps the trailing stop to the yellow dots. So that's the way I got that one set. So that one's cool. All right, we like that one. And then if you think the market's coming down, you'd have to have the dots on the other side, and then you could hit the sell side. But I want to show you something really cool. Watch this. So you've got, let me show you the sell side, why we got it, why we're talking about it. We're going to come in here, Scout. Okay, take your picture. Get your camera out, take that picture. That's the sell side. Now you have to drop these. You have to have the little dot be on the right side of the market, so the trailing stop will jump to the dot. If you try to do it on the wrong side, it won't work, right? So like right for here, the dot's on the underside, so that means I would need to do a buy, but I don't think the market's going up, so I'm not going to do a buy right here. But if I hit the sell, see, it doesn't really work because the dot is on the wrong side. I mean, it still works. It's just the trailing stop's not going to jump to the dot until the dot flips to the other side. So the trailing stop is kind of stuck at 50, in this case 53. I don't really want it to be at 50. That's just where I put it so that it'll jump. Okay, now we got the dot up there. So now when I click sell, it gets me in, and see how quickly the stop jumps right to the yellow dot. So you have to kind of make sure you're on the right side. All right. All right, so now it looks like that is going to get stopped out. I don't know. We'll see. Is it going to go down? I did a short on that one. It's not going immediately in my favor. Usually when that happens, I just get out, take my smaller loss. I don't let it go all the way back, because I'm like, well, it's not immediately going in my favor. You know me, guys. I'd say that all the time. If the market doesn't immediately go in my favor, I just get out and take the smaller loss. The first loss is usually the best loss. First loss, best loss, smaller. If you wait, you end up usually losing more. Not that the market can't turn around and go in your favor, but if it doesn't immediately go in my favor, I'm not happy with it. I just get out. All right. That's the way I do it. Okay. So now I want to show you this really cool feature. Watch this one here. I showed you buy market. I showed you sell market. I showed you ATR. So you should have pictures of all three of those. Now the last one is the limit order. I get so many systems. Scalp, ATR, trail, limit. All right, let's scalp, ATR, trail, limit right there. All right, take your picture. Sorry, I moved it out from under you. You're trying to take a picture and I moved it. Go ahead, take your picture. Now this is a limit order, meaning that the market has to come down, touch your order, and turn around and go back up. Okay, so it's a little bit weird, a little bit different, but it's the opposite of a trailing stop. We got trailing limits. All right, so now let's hook this up. And so it's just going to be the opposite of the stop. Now we can't do it right now because the dot's in the wrong spot. Okay, there we go. So we're going to put this in there. And now it's going to have a trailing limit. So all it has to do is come down, fill us, and then turn right around back up and go 5 up. Now, if it just keeps going through, that would have been better with a stop, right? See that? Look at that. We just made money. It comes down, spiky dikey do. You guys know your spiky dikey do's, right? So if you get a spiky dikey do where it spikes the yellow dot and then turns around and goes back up, this is the way you make money off of spiky dikey do's. Now, if it goes straight through, well, you're going to lose money. That would have been better with a stop order instead of with a limit order. But if you're in a situation where, in this example, the market's in an uptrend right now. It's changed. It's gone from downtrend to uptrend. Well, you're more likely on the downside to get a spiky dikey do and a continuation. So on an uptrend, you'd use a limit order, right? And especially if it's way up, if it's way down in the lower region of the RSI. So now we're going to expect this to just spike our position and go back up again. Now it didn't, it just kept going down. So it reversed. So we lost our money. It's just another tool for you. I'm not telling you, it's better than the other one. I've actually had better just doing the stop, but the limits are cool too. I can make money with the limits once in a while. Usually, it depends on if I'm good at the carnival tent of picking the direction. The market only has to go back, right? Just has to come back, spiky dikey do us, and then pop back up to the limit order. And you'd be surprised how often that happens. It happens a lot. Now we're at 1-to-1 ratio. You can tighten that dot in. You don't have to have, see, for example, you come over to ATR. We got 1-to-1 here. We can zoom that in a little closer or a little further out, make those dots come up a lot more, a lot less. It's up to you. And then of course I like Heikin-Ashi. So I get a lot less arrows if I turn on Heikin-Ashi, and then that's how I filter out a lot of the arrows. You guys know I love Heikin-Ashi. I use Heikin-Ashi on everything. So for me, when I do this, I want fewer arrows, not more arrows. Paul was saying he likes the lots of arrows because he gets lots of trades. For me, I like fewer, better arrows. Does that make sense? Fewer, better arrows. All right, let's see. Let me squeeze this down so you guys can see it better. So I'm not in the way. There you go. All right, so I like fewer, better arrows. So I can bring this into like 6 and get pretty aggressive in here. 7, 6. Sometimes when I'm like this, I'll just do price bars back. So then you come in and you program this. Instead of scalp ATR, you'll notice that I have a price bars back in here somewhere in all of my different. I got a whole bunch of. I might not be able to find it right now. All right, sometimes it's easier to reprogram it than it is to go find one in your list. All right, so now we're looking for it to give us a spiky dikey do coming back. This is a limit order on the range bar 18 with we got the average to range ATR set to 1 and 0.6 instead of 1 and 1. So it's a lot more aggressive, just needs to spiky down and then go back up. This is where, you guys know me. You've been with me for a while. I like to do the scalp and trail. And if I'm on ATR, I can see the trends a lot better. So that's why I do scalp and trail. Did we get it on that one? We did. We got the $25 on that one off the limit order. All right. So that's kind of fun. That's one thing Paul didn't do for us last week. He didn't trade very much. At least this time we're getting a bunch of trades off. Let's go back to just doing the stop. We'll drop the stop in there. There it goes. We got that one. Do more, Land. Do 2. Okay, we'll jack it up a little bit. I don't want to do 14. This is going the wrong direction. The market's in an uptrend. So actually, if we're in an uptrend, we're going to do the spiky dikey do one. All right, see if it'll come back and spike for us. All right. I know who you've been watching if you say winner, winner, chicken dinner. I know that guy. He's a lot of fun to watch, I have to admit. He's he's a pretty entertaining guy. What's his name? I can't remember. I don't want to give him any. You go watch him. He's fun. All right, there's Lowdown Kill. It's nice to see you show up, man. Nice to see you arrive. We've been having fun. It's been a crazy morning. I accidentally hit 14, and of course, that's the one I got my hiney handed to me on. That's why we're down $1,500 because I did one trade with 14 contracts, and I wasn't paying attention and lost them all. But other than that, we've been doing pretty good. Look at this. All these greens. Look at all the greens in there. We've been doing pretty good with this little strategy, and we've not really been doing anything but just goofing off. We've not even been really trying to be more sophisticated about it. We've just been sticking it in on every single one. Remember, you got to take your commissions and fees out of these. So if you're making 25, just figure you're going to take 5 out for commissions and fees. You can make $20. $20 each time. And if you can do, if you can do 4 an hour at $20, 5 an hour, $20, that's $100 an hour. That's pretty good wages, right? I don't make that at the gas station pumping gas. So this is my scalp strategy. This is just the way I'll scalp, but I do the scalp and trail. So scalp and trail just means I'll drop 2 of them in at the same time. So I set up my positions here. So I have a scalp and I have a trail. So I just accidentally hit that. No, I don't want that on there. So you come in here and you'll see one of these is a trail. But basically with the scalp and trail, I'll drop it in twice. Boom, boom. I put one in here and one in here. One is for the short scalp and one has a further out limit. That's really all there is. It drops to the limit, to the trail, to the ATR. And then the first one takes it off at 5. That's the scalp, pays my commissions and fees, and then lets the trail go on the green and yellow light, right? So that's the scalp and trail. So if the market's trailing like this, it's nice. You can catch a nice longer trend and make more money. You're not always just taking the 25. The 25 to me just covers commissions and fees. So I'll drop in the scalp, which has a 5, and then the trail, which is exactly the same thing. It's got a further out limit. And of course, those limits can be moved. You can grab them and move them wherever you want. You can come in here and say, okay, I'm going to go 2 of these. Drop. Well, that wasn't sell market. Okay, we're going to go 2 like this. Okay, so now I've added 2 in, and I can grab this limit order and I can pull it out. That's all I'm really doing. But I'm doing it automated. I click QOCO1, QOCO2. One puts one in at 5 and one puts one in at 25. That's the scalp and trail. So if it scalps, takes the 5 and then just continues to trail down, the yellow dot trails down behind, and then it hits the limit order, or it stops out at the reversal on the yellow dot. So it's all just kind of semi-automatic. I call this semi-automatic. There's also the automated system. This is a complete autopilot in here. You can come in here and you can set up, and now you can come in and just every single arrow, you can set it up just to trade every arrow. You can do the longs or the short sides, whatever you want, but you set it up. And now you don't even have to drop it with the QOCOs. You just turn it on here. So now you just say, okay, start. And now it's just going to sit there and trade every single arrow. That's the way I have it set up. So I'll show you, you can see it's just a market order. Got the same thing, stop, got the 10. We got down here. I'm not doing any of the jump stop stuff. I'm just doing 10 and a limit order is set at 25. And we're going to take 25 off with the 10. So it's a 2-to-1 risk versus reward ratio. And that's all it is. And it just goes right off the ATR arrow. So it waits until the arrow. So that little conversation we had earlier, now you're just going to wait for an arrow, and then you're going to see if it'll pop you in and pop you out. So let's see if it'll give us one. That's the RSI down. Okay, there you go. So see, we didn't even have to do anything. Now you turn on the autopilot. Now every time you get an arrow, it's just going to try and snap off 5. Now the problem with the autopilot is it can't do scalp and trail. It can only do scalp, or it can only do trail. It can't do scalp and trail because the autopilot is set up to do, what do you want me to do when I get an arrow? And then it does that one thing. So if you say, well, I got 2 contingencies, well, the autopilot's not smart enough to have contingencies to do 2 different strategies simultaneously. Now you can do 2 strategies on different charts. So you can say, well, I'm going to do the NASDAQ 18 here, or I'm going to do the NASDAQ and the Dow, and I'm going to do scalp on the NASDAQ and trail on the Dow. You could do that. You could even do scalp on the 18, and you could open up an 18 chart, and I think you could do 2 charts. That would be a little bit more sophisticated. We're running out of time. Well, maybe we'll do that on another. How's that? We'll play with the autopilot and we'll try and do a scalp and trail, and we'll set it up so that we have scalp on one time frame. We'll open up a second chart and we'll do trail. You know what? I bet you we could do it. We could open up 2 range 18s, set them up exactly the same, and on one range 18 chart, we could have the scalp, and on the other range 18 chart, we could have the trail. And the autopilot would do it that way. We could do it that way. We just wouldn't do it all on one chart. We'd do it with 2 charts. And the autopilot will run one strategy, the scalp strategy, on one range bar 18, and it'll run the second strategy on the range bar. Yeah, we could do that. We're going to do that. We're going to do that next Wednesday. All right. We're only doing scalping once a week because this is a university class, remember. I teach down at Utah Tech University, and this is our lab. And I'm on summer schedule. So on summer schedule, I only teach in the summer times on the lab. I only hold the lab 3 times a week. So we get Tuesday mornings at 8 o'clock, Wednesday afternoons for scalping at 1 o'clock. Man alive. I need to turn every time it's getting a new price bar, it's giving me a ring the bell. I don't want that. How do I turn that off? View. Let's come over here. This is driving me crazy. Okay. I get it. Where's the layout, accounting, control? Man alive. It's okay when it's every minute, but when the bar is moving like mad dog, I need to turn off the bar. This thing's going crazy. Where's my sound at? Control left panel, sound events. Okay. Sound events. Look at the market go. Man, holy cow. Sound events. I can't even get it to pull up. It's going so fast. All right, I don't know what the heck. Yeah. Stop. Everything's just going out of control. Stop. Exit chart. Exit all. Exit chart. What the heck is going on? This market's going absolutely bonkers after hours. Come on. Kill that. It won't let me kill it. See if it'll fill it. Won't do anything. It's stuck. Something went haywire. Boy, this market, I got to turn off the sound. Holy cow. What the heck? Okay, I get it. Go away. This market's going to town. Let's go down to a 1-minute chart. What the heck is going on? All these charts are open. All right. View. Sound events. New price bar. How do I turn that off? I don't want it. Sound. New price bar. None. Something's giving me a no every time. All right, I don't know. It's going crazy. I'm going to reset. There, I turned it off. All right, guys. My gosh. You said Google's dumping? Let's pull it back up. Try again. Get back in here. Kirk says his earnings after hour. Let's go back in and see what happens when we pull it back up again. Google and Tesla earnings tonight, John says. All right. I got well, that's the problem too. I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 charts open. So they're all ringing a bell every time I get a new price bar. I don't need that. View. So each one. View. Sound event. New price bar. None. Well, that's not, it must be a new arrow. That's probably what's happening. Let's close all these little tiny charts because that's the one that's killing me. I usually have them on Heikin-Ashi, so I'm not man alive. I turned Heikin-Ashi off. That's why it did it. I turned off Heikin-Ashi, and so it's not doing it on every new price bar. It's doing it on a new arrow. And when I had range bar 6 turned on with no Heikin-Ashi, I was getting an arrow on every single price bar. Turn that dumb thing off too, right there. Well, that's not as bad. That's better. Sorry, guys. Man alive, that thing went crazy. After hours. Let's go back over to, that's a 1-minute chart. Range bar 25. Okay, now it's not screaming at me. Well, all right, we've kind of run out of time. Do you guys have any questions? I know we went really fast. I felt like we were pressed for time, and I kind of went through, and at least you got your photographs of all your different settings for this is Scalp and Scalp. And we'll do Scalp and Trail again next week, and maybe we'll talk about the autopilot and see if we can't, the autopilot's really fun. We'll see if we can't automate that to do a Scalp and Trail, which I'm sure we can. Man, look at this. We went crazy afterwards during that after hours, and it just went nuts. So I couldn't stop it. We were doing pretty good until after hours, till the market closed. Look at this. We went straight through. And we were just goofing off. All right, goofing off. It's fun to goof off. Why didn't we have a limit order on that one? Am I on the get me in? I am. Huh. They should have taken us out. Anyway, all right, guys, stop. I guess that's all I got for you. Does track and trade work with most brokers? No, it doesn't. Because of the because of the capabilities that it has to work with just the one API firm that does all of this stuff. So to open an account with Track and Trade, you have to open an account with a company called TradeEar. So Track and Trade works exclusively through TradeEar because all these fancy autopilot features and everything that it does has to have a brokerage firm that accommodates those types of things. So it's just with them. It used to do StoneX. They left StoneX when I sold the company. They left StoneX and went to Trade. Oh no, StoneX. Oh wait, Kirk's right. Oh no. TradeEar is the stock market version. They left StoneX and went to QCO or QCD or something. Who are we with now? Open an account. Yeah, I don't even know anymore. The clearing firm, no, the clearing firm, I think we had to move all of our accounts out of StoneX, right? And we now get everything with, I don't know. Kirk probably knows better than I do. TradeEar is the stock market version. StoneX is the futures version, but the StoneX is the old futures version. We all switched over to, remember when we had to all switch all of our accounts over to a company called QCO or something like that, or OQCO or something like that? I can't remember. Yeah, I'm so bad at this. I don't know. That's how it works, though. All right. Let's come in here. You guys, we got to play with this a little bit. We got to sell you something. We got to get you guys to sign up. You guys that are new that don't have Pit News Magazine. First of all, here.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's the software. That's where you go get it. Again, they got two versions, futures and stocks. And they got two different clearing firms. That's why I'm a little confused. I can't remember. I got bad memory. So I haven't been involved in that side of the business for a long time. So we just open our accounts with, you just open it straight through the software. You just come up here and say, open real money account right there. And then it opens up a website over on another picture and away you go. And so that's how it's done. And what else? We got Pit News Magazine. Let's have Joe Biden tell us about that.
Look, folks, I was reading this thing, Pit News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
Get Pit News Magazine, guys. That's what it's all about. We want you to have Pit News Magazine. All right, just go get Pit News Magazine. It's over at pitnews.com.
Hey, it's Claire. If you love trading tips with a side of sarcasm, hit that follow button and subscribe to Pit News on air at pitnews.com. I'll be here every week, unless I blow up my account again.
All right, that's Claire. We got this.
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pitt News Magazine. You can thank me later.
We got to get some hats like that. Would you guys like some hats? If we got hats like that, would you guys want those hats? That would be cool, huh? Little Pitt News Magazine hats. So anyway, we're having fun. It's a little scattered today. I was trying to go really fast, and we need to slow down and take things a little bit slower. But so hopefully you guys are having fun, and we're having a good time here. At least we're having fun, right? Look at the market go. It's taking off now. This is after hours, so it's taken off.
Look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
I got a whole bunch more of these that I've never uploaded into the system. I need to upload some of them more. I got some funny ones from other, Hollywood people too. Some funny things. All right, guys, that's all I got for you today. We're just sit here and goof off now, watch the market go a little bit more. But how big is that move after hours? That's in the NASDAQ. That's a big move from there to there. That's a $650 rally. That's really nice. You say Google? Let's not run off so quick. Let's go look at the Google. Let's go pull up the stocks version of the software. See what's going on over there. So you say Google, and we had earnings on Tesla. Portfolio 68. Okay, let's go look at GOOG. And we got to go down to, let's go down to a 1 minute chart. Yeah, it didn't jump too much all over the place. It did. Look at that. It came all the way down here. Now it's all the way back. 2 o'clock. Market closed right at 140, 147, 49, 50, 50, 53, 45, 67, 58, 9, 60. Oh, wait a second. This hasn't got there to after hours yet. Okay. TSLA. Yeah, it's not going to show us anything either. All right, guys. I guess we're going to have to go look at this first thing in the morning, 8 o'clock a.m., bright and early. We'll see you tomorrow morning. So we've got, we're on the summer schedule, so we're only doing 2 sessions in the morning a week right now, 8 o'clock Tuesdays and Thursdays, and then 1 session for day trading and scalping Wednesday afternoons at 1 o'clock. So we'll see you for scalping next time. We're going to do the automated autopilot. We'll do autopilot next time, not just the semi-automatic QOCOs. We'll do the autopilot, and we'll try and do a scalp and trail strategy on the autopilot next week. And we'll give it a shot. All right. I'll have it all set up so we can just, I want you to see the settings. So I'll do the settings while you're here, and we'll do a scalp and trail. Autopilot scalp and trail next Wednesday at 1 o'clock in the afternoon. Be here, be square. All right, guys, that's all I got for you today. We'll see you tomorrow morning, 8 o'clock, and we'll review tomorrow. We're going to review our. I need to put some money into the new what are they? The Granite Hill stuff. So we'll see about those. We'll go look at the Granite Hill stuff and see what they're doing on the big time dividends. All right. So that's what we'll do tomorrow morning. So come and join us. We'll see you then.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah. Definitely subscribe to Pitt News Magazine. You'll thank us later.